Here's me breaking down my strategy as quickly as possible. So first of all, we start on the higher time frame, something like the 4 hour or the daily. This gives us a picture of where price is likely to be drawn to on the higher time frames. This is what we call top-down analysis. So what I'm looking for here is levels in which the market is looking to take out in order to seek liquidity, fill supply and demand areas or stuff like that. So here I've noticed a draw on liquidity here and a draw on liquidity here, where price would be drawn towards in order to take out people's stop orders. Then we go on the lower time frames. So now I'm on the 1 hour and I can see that price is making higher highs and higher lows, and we're above the EMA consistently, so we're looking for buys here. I scan through my intraday time frames to see which one lines up the best, and I can see that on the 2 minute time frame here we can see higher highs and higher lows which have been respecting the EMA, so I'm going to look for entries here. Because this EMA was acting as resistance multiple times, price then broke above and acted as support, I'm going to look for this EMA to be used as support once again when price prints a higher low to then push off to the upside once again. Here we can see that price is rejecting this level. What I'm going to do is take a Fibonacci retracement tool, plot it from this last significant low to the last significant high, and watch the key areas between the 61.8 and the 78.6 fib level. Now that we've got a candlestick rejection from this zone in the form of this hammer candle, I'm going to be looked at taking an entry from the 71% fib. I put my stops just below the previous low, and I put my TP2 at the 23% extension level. Prices broke the high before tapping us in. That's fine, we'll just keep going and look for another entry. All this does is further solidify that we're in an uptrend, that the EMA has been respected, and we can keep looking for buys. Again, we've got an area that's being rejected, so this looks like it's printing a higher high. What we'll do here again is put the fib from the last significant low to the last significant high and look for that key area for some rejection. Okay, so we've got the rejection here in the form of a tweezer bottom. These two candlesticks together basically make one wick. You can see that this candle closed above this candle open as well, which is very bullish. So what I'm going to do is place a limit order at the 78.6 level, put my stops just below the last previous low, and put my TP2 at the 23% extension, giving us a 4.19 trade. So here price has tagged us in on our limit order. So at this point where price has taken out the last previous high, I'd put my stops to break even, making it a risk-free trade, but I'm going to leave it on there just so you can see the RR. So there we have it, TP hit. This has been a 4.2% trade made within 58 minutes. There's a little bit more to it, but I don't have the time to explain, but there you can see how to make 4.2% within 1 hour.